Let's talk about the major trend once again. If you can remember, in the beginning of the technical details of trading, we spoke about the major trend already, and that we should be consulting it when we are trading. It is very nice to see a support from the major trend when we are trying to make a trading decision, and when we are seeing a signal in our trading time frame, and when we see that the major time frame, the major trend giver, is actually agreeing with our decision, then this is increasing the power of the signal that we are looking at and that we have found. Now here, let's take a look at the trading screen. I have added one more chart. So if you remember from the previous lesson, we were trading with the 1 minute time frame, and this was our entry with this wave beyond the trigger, and a really nice combination with the stairs combination of going down in stochastic. Now, our major trend, of course, is going to be in the 5 minutes. And if you remember, then the major trend is the time frame that is one step above. So if we are using 1 minute as our trading time frame, then the major trend one is going to be the 5 minutes. If you are trading the 5 minutes, then the major trend will be in the 15 minutes. If you are trading the hourly chart, then the major trend will be 4-hour chart. So that's simple enough. So what are we going to be looking for in the major trend? Are we going to be looking for a divergency or the same kind of a signal, or what? Well, the answer is it depends. But in this exact situation, which we have taken apart in the previous lesson, we can see that the correlating location in the 5 minute, and as you can see, the per real time, this is the reason why I love per real time, it actually duplicates the cursor in the 5 minute exactly in the spot where we have it in the 1 minute. So if you can see in the 5 minute chart right now, the MACD and the stochastic, so once again this is the spot, and the MACD and the stochastic isn't telling us very much. However, there are details. Remember that the larger the time frame, the slower it will be. So the 5 minute, the 1 minute might give us a nice, beautiful structure with all kinds of signals, but the 5 minutes will be really, really slow turning and not showing us very much. However, we are not looking for the same kind of a structure when we are trading single signals. All we are looking for is a hint that this is the correct choice. And in this situation, we can see a convergency. And remember that the convergency is a support for the idea of the working trend. So as we can see here, that we had a downtrend, and then we had some move up, and here where we found our entry into falling in the 1 minute, we can see this wave already forming, and this gives us a convergency. Because this wave, this top wave in the MACD, it is lower than the one before and a lot lower, and so it is in the price, and in this way it gives us a convergency. So remember that the divergency is a weakness and the convergency is the strength of the trend. And here we can see that the trend is still very, very powerful. And there is a very small hook in stochastic here. It is not very relevant, but it is also quite nice to see, because there is a top peak, and this one here is also considered to be a top peak, and it is lower than the one before. And these are the super small details of MACD and stochastic that you should be looking at and paying attention to when you're trading. These kinds of hints will be very, very helpful, but those will come with experience, and the more you practice, the more you'll see all these small details. And if we take this entry into falling, what do we do in the 5 minute? So the 5 minute is pretty much telling us that the downtrend, which began in the early morning, is continuing. So according to the 5 minute, this signal in the 1 minute that we have found, we are entering into trend. So In 1 minute, there is no trend. There was some side movish activity with some climbing trend before, so there is no real downtrend. There is no downwards direction. However, there is one in the 5 minute. If you see here, that's one big downtrend. And entering around this location into falling, we are pretty much entering back into falling trend. So this is the way how the 5 minute, the major trend, is gonna support our decision in the 1 minute. And there are situations where the market has just opened and there is no real support from the 5 minute or from the major trend, and that is okay. In that case, we should not really think about the major trend so much because there is no major trend yet. We should take just the single signal that we see. The first signal that we see, the nice one with the stairs in stochastic and a really nice, maybe some small divergency and then a wave above or beyond in the MACD, beyond the trigger. And we'll take the first one and we'll see how it plays out. And then later on, maybe in an hour or two, we'll already have a major trend in the older time frame, which is in this case 5 minutes. So once again, it is not absolutely necessary to always be watching the major trend. A lot of times, in many cases, the major trend might be quite slow and there might be no direction, and especially early in the morning when the market just opens, there probably and most likely there will be absolutely no major trend. So in that case, we'll need to rely on simply on the single signal that we see in our trading time frame, which is in this case is the 1 minute. And once again, I really recommend you to start working with the 1 minute and 5 minute combinations, and only later on move on to the older, the bigger time frames, simply because in the 1 minute and the 5 minute combination, you can trade many times per day, and there are many signals every single day. And in this way, you'll be able to get the most practice out of your time at the workstation. So about the exits, now we know the basic structures, the wave beyond or above the trigger in the MACD, and as we can see here, plus the support from the major trend, that we are going back into the falling trend. That looks quite nice. In this picture right here, we can pause the video once again and draw the combination of the 5 minute major trend and the 1 minute trading time frame, the combination of the two. And this kind of a combination is fantastic. And as you can see, this is quite very easy to follow. And as you can see here, we had some slow market and we've chosen exactly the perfect spot where the market started moving down. This is what the professional indicator work has to yield. It yields the perfect entry where the trend is most likely to begin. Well, or to continue, of course. So, and as you can remember, then we have left it here, and in the 5 minutes, there is still absolutely nothing. There is no weakness. The stochastic is deep into red, but we still have left it because our main trading time frame is the 1 minute, and the 1 minute showed us the smallest possible weakness, so we had left it. And then we entered with the next possible signal for climbing. And once again, the 5 minute, it wasn't very supportive of this decision, and this is pretty much going against the trend. So this entry right here, it is okay, but you have to understand that this is an entry against the major trend, and this can be very risky. So if you do this, it is absolutely fine, but you must have a correct expectation. If it moves against you right away, then you must leave the trade and perhaps remember the rule of back into trend. This is where it would come in very handy. If you see that it moves against you very powerfully, that means that the major trend is still working very well, and you should enter back into the trend at the earliest possible position. And as you can see here, the trend, it is still working upwards. However, it's not very powerful yet. So we might be a little bit nervous. And here we can say that we are going lower already than the previous bottom peak, and it is quite nasty. Perhaps around this place I would have left the trade. However, you don't need to. You can have your stop would be technical. It would be quite small as well, and it would be around this place right here, around this bottom wave. And as you can see, it did not touch it. So the stop would not be pulled. You would get very nervous, but the stop would not be pulled. And as you can see, there is pretty much nothing in the MACD. We are just bending, going downwards. And the stochastic, well, yeah, there was some kind of a weakness right here. The top peak was lower than the one before, but there was no, as I call them, the stairs concept, and no real nice stairs to see. And then, boom, it works quite nicely. So we would have been lucky around here if we stayed, and then perhaps here if we can see a spike formation. Now remember the 50% spike rule, and this does look like a spike. So if we see that we go around 50% down in this spike-ish structure, the 50% of our total move, we should leave the trade. And yes, we would have left the trade here. So let's check it. Let's see, 183, and the maximum was 215, so it's about 33 points. So if we go down about, yes, around here, we would have left our trade because of the 50% spike rule. This is amazing, because when I'm showing you these examples right now, I have no idea what comes. I haven't been looking and checking what is happening in the next few candles or whatnot. I just opened the market. It's quite a recent market. I think it's from, today is Monday, and this market is from Friday. And I have no idea what happened precisely on that day, all the pieces and details and all the shapes and signals. So I just opened it. I started with the beginning of the day, and I am showing it to you the way it worked. So I have no idea what happened. And unfortunately, it's too complicated for me to actually be trading a day and then be filming my each entry and then on video for you in the learning program to actually explain it as it goes with a filmed exact precise entries. It is quite difficult. And I tried to do that, and unfortunately I failed. It's quite difficult to put those videos together and make sure that the sound is correct. So it was a complete nightmare. And that's why I'm stuck to actually hypothetically marking the entry and exit positions, but in a real market that happened like yesterday. So this is a real market, and this is something that I am trading on a daily basis, and this is the way I'm looking at the indicators. So this is precisely what I would have done, and this is where my entry would have been, and this is where my stop would have been, and this is where my take profit would have been, and so on and so forth. So yeah, and as we can see, there is a spike forming, and this is probably where we would have left the trade. Because our take profit, let's check if our take profit would have been taken before the spike happened. And let's see, our stop would be around 8 points. Let's say 9 points. So times 3, it's 27 points we need to take in order for us to close the deal, close the trade with a take profit. That means that our trade would close around plus 30. So this is going to be, and here would be our take profit. This is exactly where would our take profit be. And this is where the trade would close. So you wouldn't even have to worry about the spike here actually. And this is the power of math. This is the way trading works. And I love it. When even I open any day of the week and I start looking at what was happening and what I could have done, sometimes I'm just fascinated about how precisely point to point this system works. Now, we need to talk about something important right now. So here is a great example of a signal that did not work. As you can see, here is our wave beyond the trigger for falling prices. So our entry would be the beginning of this candle. And as you can see, the stochastic had some kind of stairs here in the green zone. Then we went down, and then This is our stair going down that we were very much interested in. And as you can see here, also a very beautiful wave beyond the trigger going down. However, as this candle finishes, the market starts to move against us very, very rapidly. And in this case, when the market moves against you very powerfully and very quickly, right when you have entered, this is a very nasty situation, and most of the time probably those kinds of moves will take your stop, will pull your maximum risk that you can afford and the one that you have set out, and in this case it will be this peak right here. Again, once again, the technical stop. The fixed one is not necessary in this kind of a situation. As I've told you before, the lower, the smaller the stop, the better for you. The better your trading result in the end of the day will be. So here we would have our stop around 195. So it will be around 7 points. However, as we enter, we see that we have already a power going against us. And in this kind of a situation, the best place to leave this kind of a trade manually is when the MACD crosses back above or beyond the trigger. Remember that initially MACD was designed to give signals at the points of crossovers of the MACD and the trigger line. So if it crosses from beyond, it's the signal into climbing, and from above, it's signal into falling. But again, we are not using those for our entry signals, but if the market moves against you very powerfully, very, very quickly, it might be a good idea to just leave it and not wait for your stop to be pulled, to leave at a crossover. So as you can see right here, we are crossing over quite powerfully, and the stochastic is creating actually a stair up. So by creating this stair down, we see a structure for falling. However, as it turns very fast, and it is already visible by the end of this candle, the first bottom peak, the second bottom peak, and the third bottom peak, and it actually, it is creating a stairs structure going up. So in this kind of a situation, with this kind of a rapid move, as soon as the MACD crosses back over the trigger, we should leave the trade. And in this way, we'll take only half of the amount of the stop that we initially set out. Those situations will happen quite often, and especially when you're going to be trading just simply indicators. The reason being is that this powerful turn happened for a reason, and there was a reason why it did. And the indicator will never tell you that reason. But first, before we learn those reasons, you need to understand the structures and the movements of the markets, and to learn indicators in general, because the indicators, as I've said before, are a great beginning for any trader, in my personal opinion. And this is what I've began, and this is what my mentor started by teaching me. We started with indicators when I was going through the educational program myself. The best way to master this is through practice. I am giving you the theoretical concept, the way it looks, how the shape is being shaped, how the structure is developing, and what we are looking for, and which signal works, which signal doesn't work, and the structure, and blah, 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 blah. But you are the one who will need to use this. And you are the one who needs to prepare for the battle, prepare for the real money trading. And best way to do that is actually to trade and to practice, and do it only with demo account. Do not trade with money until you complete, once again, until you complete this program and you're sure that you know what you're doing. Because it is quite simple, but it is only simple when you have a lot of experience and when you have practiced this over and over and over again. And I cannot stress this enough. Experience is the key. And as a small reminder, the structures that I'm using in the MACD and in the stochastic as my signals, they are not very commonly used by traders in this way. Because remember that the MACD and stochastic were designed for a completely different method of trading, and there is no such concept as a wave above or beyond the trigger in the MACD. However, this is something that I use, and this is something that actually works. So once again, good luck to you, stay strong, and use everything that is given to you in this learning program. All right, don't forget about the test. Enjoy your homework, and I'll see you in the next lesson.